to it. Good evening, good evening, good evening, everybody. How y'all doing, man? Hey, how you doing? Hopefully everybody having a good day, man. Hopefully everybody having a fantabulous start of their week. You know, I really hope you having a good time. I really hope you're having, look kind of shiny in the facial area. Too dark. I'll just leave it like that. Now I look shiny in the facial area. Good evening, everybody. If you are joining us for the first time via YouTube or via the Talk of the Ticks, I would like to say welcome. If this is not your first time tuning in to Tim's Tidbits, I still want to say welcome. But I want to give you a hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. Y'all heard how I rolled them R's in there? Let me say it again. Aranya Grande. This big spider if you don't hablo español. And you are in tune to another episode of the Intraday Price Action Recap. Y'all like my echo? Y'all like my echo? Let me see who up in here, man. We got Deborah up in the Discord. What's going on, Sherwin? We got Jim Big Bird in the Discord. We got Marco Polo in the Discord. We got Yolanda in the Discord. Somebody say excuse me. What was that? We got over there in the YouTube. We got Kim. Good evening, Kim, with the big spider emoji. We got Here to Learn and Share over there in the tube. We got E-Rock and Don't Stop It. E-Rock and Don't Stop. We got E-Rock over there. What's going on? We got Honey. We got Honey over there in the Discord. Hola. What's up? We got Cuz over there. I said Discord in the tube. We got Cuz. What's happening, Cuz? Man, I see more numbers than I see names, but them know the names I see, so that's all I'm gonna say. Let's get into the intraday. I was gonna say the overnight. Before we get into it, I see that I have a bubble of the bubbles over here inside the Discordia. Let's see what is going on. There's a bubble in the bubbles. The bubbles in the bubbles. All right, so when I click on there and I go to questions for Big Spider, there's a dissertation. There's a dissertation in here. Let us review this dissertation. Let me share my screen with the tube. Put it side by side so we can see the dissertation. This dissertation is being brought to you by Jim. Let's blow this up so people that's watching on their devices or they have experienced eyeballs. We're going to call them experienced eyes. If you have experienced eyes, then we're putting it on. I can't move y'all out of the way. As far as I can move you out of the way. Okay, if you got experienced eyes like me, then you're going to need me to blow up the screen like this. What's up, KC? I'm your bug, man. That's what I am. All right. Jim Big Bird says, I took a trade this morning. We were going up most of the overnight. I looked at some of the bullish PD arrays in the recent price leg and decided to use the bullish order block to retrace to and take an entry. I also noted that the 1 minute fair value gap was made during the 650 to 710 macro time. The mandatory stop was about 10 points. I took the trade, but I feel like I'm trying to catch the bottom and am stepping in front of a train because at that point of entry, the lower time frame order flow was bearish. My first 3 targets were hit, and at 20 points I moved my stop loss to break even and got stopped out. What I'm wondering is should I have waited for the price to start moving up, see the stop rate at 8:52 a.m. and then take an entry on the order block, seeing that the lower time frame order flow was now bullish? Am I trying too hard to catch the bottom or the top? Just based off of this question alone, right there, you already know the answer. Right? If you fix your mouth to say, man, am I trying too hard to catch the bottom? You already know you're trying too hard to catch the bottom. I can't answer that for you because I don't know. I don't know, like, if your higher time frame analysis said enter on this order block. If your higher time frame analysis said enter on this order block, then then no, you're not trying to catch the bottom. Right? If your higher time frame analysis said, hey, you're entering when we touch this order block. Right? No, you're not trying to catch the bottom. Now, if your higher time frame analysis says, hey, we're entering in on this order block, and then when it get to the order block, you're dropping down to a lower time frame trying to catch the bottom of the lower time frame move, right? Because you said you felt like you were stepping in front of a train because at that point the lower time frame order flow was bearish, right? So if you're dropping down and you're looking for buys, right, based off the lower time frame, when the lower time frame is bearish, then yes, you're trying to catch the bottom on that time frame, right? But if you take a trade and the lower time frame is bearish, but you're taking it based off a higher time frame, and you're placing your stop based off that higher time frame, then no, you're not trying to catch the bottom. Only you can answer that. Be honest with yourself. Tell yourself, hey, like I say, if you ask if you're trying, you already know you're trying. But I done gave you the scenarios of what it looks like if you're trying to catch the bottom or the top. And I gave you a scenario of what it looked like if you're just trading a higher time frame scenario and the lower time frame may have a different short-term bias, right? As far as waiting for a stop rate, you said should all right. Uh-oh. Okay, you said, should I have waited for price to start moving back up and see the stop rate at 852? I don't know where 852 is. I don't know. Maybe you talk about here and then tracing back down into there. Maybe that's what you're talking about there.
Yeah, it's that long wick where I got stopped out at break even.
I mean, you can't predict this right here, right? You can't predict this. This is just high resistance. This is a high resist. This is market manipulation, right? We traded below the low one more time. See how we came down here and went below the low there? Now, you can look at it as okay, I don't want to enter in front of the macro time. Yes, I want to wait. I want to wait to a certain time. You know what I'm saying? But in this case here, this is just, you can't predict this. This is just a case of high resistance and manipulation. Because once we came down here, was this big green line there that we trade below a low right there? What's that big green line there? Right here where I'm hovering my mouse.
It's a 1 minute fair value gap.
Oh, that's fair value gap. We traded below that. This was like the liquidity over here. This line here, we weren't trading below any liquidity there. Right there. We just traded into a 1 minute fair value gap.
That's correct.
Okay, I would need some more information here if we didn't trade into some liquidity right there. Right. If this isn't trading into some liquidity, or if this isn't trading into a higher time frame PD array, right? If all we're doing in the sell program right here, and we just came down to a 1 minute fair value gap, I would need some more information before I would try to take a trade right here based off of this bullish fair value gap here, right? Especially if we're getting ready to go into a new hour, we're getting ready to, the morning open ain't happened yet. I would just need a little bit more information before I try to enter off of this, because we didn't sweep any sell side liquidity, you know what I'm saying, for me to have a reason to expect the reversal, right? I would need to see like this right here, how we traded back up, then we dropped down and hit that low and moved back up like that, giving a good rejection, showing that there's a possibility to switch bullish, right? But at this time here, right, yes, that is, in my opinion, a little premature to be looking for a buy, because right now we're in price is in a sell program right here. So this right here is a little premature for my trading style to be looking for a buy, because at the end of the day, what did you do? Right, we came down, set relative equal lows, traded back up into the imbalance, came down, took those relative equal lows, traded back up into an order block, and then traded down some more. Now that we traded down some more, right, we have a deeper retracement here. After we trade down below all this sell side, we got a deeper retracement, right? Engage the buy side, right, showing a willingness to want to go up, and then we drop down and take out the sell side, right, and then start trying to afford some type of opportunity to participate. Now, and like I say, if your higher time frame said trade off of this area right here, you know, so trade off this fair value gap here, but it's based off of the higher time frame, which wouldn't look like this right here. It wouldn't look like this, right? Your entry would be over here somewhere, because on the higher time frame, you're just coming down to that PD array, right? It's not going to be you come down, go up, and then trade over here, right? Because that's basing your entry solely off the 1 minute. Not saying that it don't coincide with the higher time frame, but when you're entering based off the higher time frame, you're going to be entering on the leg going down like this. It's not going to go down, retrace, and then pull back, and you're entering here. It's going to be over here somewhere when it trades into that PD array, if you're doing it based off the higher time frame. All right. So hopefully that helped. Did that help any, or that you still ain't got what you need there, Jim?
Oh, no, that helps. It turns out there was a higher time frame PD array, but I didn't see it until later, so it didn't count.
Okay. All right. But yeah, on that 1 minute there, how we came down there, that was just, you know, you can't predict this right here, right? If you didn't come into liquidity, right, then you would expect that to be, I mean, if you came into liquidity, you would expect this to be protected. But since we didn't come into liquidity at this point here, when we retrace back up to there, I'm not looking for a buy because we still haven't come to a point where I anticipated to like turn around. But if you're saying we are trading into a higher time frame PD array at this time right here, this time frame is still bullish, and I want to see it switch, I mean bearish, and I want to see it switch bullish before I start looking for something to trade. That's just how I trade it, right? I want to look for buys in a buy program, look for sales in a sell program, right? Okay, dope. Anybody got anything else for me before we
to try to kill the sale and hide the cancer? All right,
are you
everybody, come on, please.
okay? I'll take it that you're not trying to talk to me because I heard everybody come on. Okay. All right, so if we ain't got nothing else, let's go ahead and start looking at the chart. Let's go ahead and start looking at the chart. Oh, sorry, y'all. Woo-wee. Oh, boy, yawn real good. All right, we got, my bad, Charles. I ain't mean to, I ain't mean to get you yawning. Oh, before we get started, I talked about this yesterday with the new Discord members. Let me pop full screen for a second. Everybody, if you decide you want to keep supporting through YouTube, you like, nah, I don't care about being in the Discord. I'm just gonna keep supporting the channel through YouTube, right? The member only videos. If you go to the member section, right, there's a post in there that you will be able to see that based off of your tier that allows you to see the old member only videos, because the old y'all hold on for a second. My son just went and picked up his prom tux, or prom suit, whatever it is, tux suit. I think we got him a suit. If you go to your channel, right? If you go to your channel and go to your membership section, right? There's going to be a post based off your tier that you can see, right? And it says here's where you can find the old mentee tier videos, right? Here's where you can find the old platinum tier videos, and here's where you can find the old gold tier videos, right? So if you're a gold member, you'll be able to see that post right there. If you're a platinum member, you'll be able to see both these posts, right? If you was a mentee, right, you'll be able to see all three of them, right? Because the older videos, they're no longer marked as member only. They're marked where you need like a link to get to it, right? Now, moving forward, you will see more member only videos for whatever tier you know what I'm saying, you support at. There will be more, just like if you look at there, it says good morning everyone, here's the 3/3/25 tape reading link. Right, that's for the mentees, right? That's the mentees, because on Mondays the mentees have tape reading, right? So the mentees will be able to see that link, right? And then it's also in the member section as a mentee or higher video, right there. If I hover over visibility, it says mentorship, right? So it's mentee or higher video inside the thing. So everybody that's still supporting the channel through YouTube, say, hey, I don't feel like coming over there. I don't need to be in the Discord. I don't use it anyway. You know what I'm saying? From March 1st forward, any membership videos, you'll be able to see it like regular with your membership tier. And but I would until y'all get used to it, you know what I'm saying, I'll probably, and I will always be sharing like the Zoom links for like the tape reading, but I'll just keep reminding y'all that's how you can still see it, right? And then everybody else that's inside the new Discord, because if you don't know, the Discord is now a paid server, right? So if you're paying through WAP for the Discord, the way you get to the old member only videos, right, is going in there and going to whatever your tier is, gold, platinum, mentee, right? The mentee playlist, that's the old mentorship videos, right? The diamond playlist, right, that's everything, right? That's everything. The diamond playlist is like just the new diamond stuff, because the new diamond tier is partially what the old mentee tier used to be, and some new benefits and features. So the way you get to the old replay stuff is by going in here to your tier, and you can see everything from the old stuff. Now, anything that's from March 1st forward, all you got to do is go to your tier. You don't have to, if you're like in the diamond tier, you don't have to come back and try to look at, like if you go into the diamond chat, the diamond replay list, right? You'll see that there are several links, right? There are several links, but you don't have to go to clicked on the wrong thing. You don't have to go to each individual link to see the newer stuff, right? You just got to go to the gold link, the platinum link, the all them other links if you want to go back and look at older member only videos, right? The newer Discord videos, they're not member only videos. You just need to have the permission to see it, and you get that by going through the Discord to find the link, right? And also, it may be called gold tier in the new Discord, but gold tier in the new Discord is not the same thing as gold tier in YouTube. Diamond is not the same. There's no diamond in YouTube, but the diamond is not the same as the mentee. The platinum in the Discord is not the same as the platinum in YouTube. The Discord and the YouTube are totally separate right now. They have nothing to do with each other, right? Nothing to do with each other. So if you see something on YouTube that says you got to be a gold member to see it, that's not talking about the gold member that's in your Discord. If it says you have to be a platinum member to see it, that's not talking about your platinum in Discord. They have nothing to do with each other, right? Everything that you're supposed to see, you will be able to see it. And I'm just addressing this because I had got several DMs saying, Tim, I got such and such tier. Why can't I see this video? Tighten up, partner. All right. What's going on, Seawalk? What's going on, Felicia? All right. Let's get to it, man. Now that I beat that dead horse bloody, let's get to it. Today's price action. Before I get started, was there anybody who was caught off guard by anything that happened today in price and would like clarification on what happened based off of what they thought should happen, right? Let me know. Is there anyone who was caught off guard by anything and want clarification on what happened versus what they thought should happen? Well, I get me a sip of high quality H2O. Nobody? Nothing?
I expected to move down this morning after we just did just a little sweep of that buy side. So I expected it down this morning, but I didn't expect it to come all the way and take the low as well. I saw some things in the chart that I thought would support price back up. So I was surprised that we closed below a couple levels, or went below a couple levels.
Okay, you didn't expect it to go all the way down to the
to that previous day low from Friday, because we had that bullish order block on the 4 hour, and we had already kind of rejected off of those daily fair value gaps. I mean, we pushed down into them and then closed back above them on Friday. So I expected us to take a little sell side liquidity and then, go back up. So that did surprise me. So, but I wasn't trading it. I'm just saying it surprised
me. Okay. So you said that surprised you. All right. Before we talk about that, do anybody else got anything before we talk about that?
So on that 4 hour, Tim, those two candles that were the order block, do you treat it any type of way when you have that second candle with such a long wick? Do you still just kind of take that first body, or how would you treat that as an order block?
I just look at it like this. When I got like a super long wick, I just look at it like that. When it's got a huge wick like that, I just ignore it. I just look at the bodies. All right. But I just keep in mind that this right here is the actual order block. Right, but when it's got a long wick like that, and I can tell that it's just some type of stop raid, I just look at the body because I want to see what the bulk of the volume is doing. All right, so looking at and managing expectations. Let's talk about managing expectations, right? Excuse me. Let's talk about managing expectations. Now, when you are dealing with an asset, okay, you always want to understand what's reasonable and unreasonable as far as a move, right? What's reasonable and unreasonable as far as a move, okay? So when you, I didn't think price would go that far into the order block on the ES. I thought the January low would hold and on the ES. Unsure of that now. All right, we'll look at the ES in a second and see if it's the same thing for the ES. Y'all remind me that I said we're going to look at the ES in a second. Wait a minute, I missed something. Both the NQ and ES have weekly fair value gaps below, so I didn't think we will retrace where we did. All right, we'll look at that also. Okay. Now, matter of fact, let's go to the weekly right now. All right. Yeah, there's a tiny little fair value gap there on the weekly of the NQ. Okay. All right, so we do have a tiny fair value gap down there on the weekly for the NQ. All right. Daily. This is it's above the consequent encroachment. It's the daily fair value gap. We talked about, I think we talked about that yesterday. That daily fair value gap. We talked about that yesterday. Now, while I'm marking this out, Yolanda, since you asked this, or anybody, period, even, but Yolanda, mostly because you asked this, why am I marking this stuff out here?
Because higher time frame actually kind of rules, and it does show that there's a draw lower.
Okay.
And
Yes.
I think that you just doing that just told me why my expectations weren't managed. I sometimes still have to work on that. I have a tendency, even though like I said, I knew we hit that daily fair value gap. I have a tendency sometimes to be like, all right, we done with it, so to speak, and just automatically be like, okay, we rejected off of there. We'll get some retrace and head back up. But then again, now that I look at you showing the 4 hour and then looking at my own thing at the daily, we technically still haven't completed the sell model on either one of those time frames either. Coupled with that weekly draw, I should have had maybe a different expectation. I see now.
Okay. All right. So look at that. Shout out Yolanda. See, this is what I be talking about, y'all. Just doing the work. Just doing the work, right? If you do the work, right? Everything she just said, right? All I was doing was just going through marking stuff out, and I was about to say the exact same thing she just said, right? We got high time frame liquidity there, resting below there with the potential of completing a market maker sell model. And we got a weekly fair value gap that's resting down there. So the weekly has a reason to come. The daily has a reason to come. Right? We've reached one of those reasons Friday. Then today we've reached the volume imbalance. Right? There's reasons for the daily to come down there. So when you got a higher time frame PD array with a reason for that time frame to come there, right? We not only have to allow for stuff like the 4 hour to fail, we anticipate it. Right? We anticipate it. Now, do we try to force it? No, we do not. Right? We do not try to force it. What do? We wait for price to do something. Right? Wait for price to do something like on Friday. Here on Friday, right? Here on Friday, we opened right over here. We opened over here, traded, touched the we opened up, touched the bullish fair value gap on the daily, took out sell side, and then retraced back up into the range, right? This was the highest day on Friday. Then today, what did we do? We traded back up, very sloppy. I'm not going to pretend like it's not, because we traded back up here, right, and did not make it back up to this breakaway gap. Traded up into consequent encroachment of that wick. Traded up into that bearish order block over there, right? And then we came down and took out the sell side and traded to the daily volume imbalance, right? Right now, we still have not taken out this sell side, right? We have relative equal lows now. We still have not taken out that sell side. So this is not a time to be trying to force a reversal, right? This is not a time to be trying to force a reversal. You have very high points that need to be broken to start to slightly invalidate it. This is a very long way away on this 4-hour time frame to get all the way back up there, and that still doesn't totally invalidate coming to this right here. Why? Because we got a reason to come back up here on the higher time frames, right? We have a new day opening gap right there, right? We got a new day opening gap right there. We can trade back up into, right? We have a bearish order block over there. We can trade back up into, right? We also got this breaker over here that we can trade back up into. We already traded up there. Now we're respecting this SIBI. Trade up, respecting that SIBI right there. Got a breaker. We got other things on a daily we can trade back to. We got a weekly PD array there. We got a weekly PD array here, the new week opening gaps. If I said new day opening gap, I apologize. We got a new week opening gap. We got stuff that we can retrace back up to, right? We can do what I wanted to retrace back up there now. Why? Because we've been consolidating here in a bullish trend, and now we're starting to engage the sell side. I want to see it go ahead and sweep this sell side and start to get back up out of here, because we're in a you know what I'm saying, we're in a bullish trend. And when you're in a bullish trend, where's the best opportunity to buy? At or below the open, below an old low, right? Looking at the power of 3, at or below an old open, right? Get down there, take out some liquidity, right? Take out some liquidity. Not really slide so far to get all the way down to this very small fair value gap, but at the end of the day, there's still liquidity resting down there that can be taken right there at that weekly fair value gap. But if price wants to slide down there and get it, let it slide down there and get it. But when you in a bull trend and you start getting retracement, right? You want to see it retrace back. And if you look here, right, this right here, it's ugly, but that right there would be your start of your market maker model, right? The niche consolidation over there that I circle right there. Get here, right there. That'll be the start of your market maker model. Your niche consolidation right there, right? We got some offset accumulation up in there, right? Because we consolidated, took stops, took off, right? Now we're coming back down. Then that would complete that market maker model, right? So shout out Yolanda for, you know what I'm saying, recognizing.
Go ahead. I think I was married to, I wasn't expecting a reversal. I was able to early the AM session, I was able to trade it down. I expected, like I said, some pullback, but I was married to this 15-minute, what I thought it would complete a buy model before we would head back down, and I was married to that level of 21,166 on that 15-minute at that original consolidation before we start.
Hold up. You was on the tape reading session today, wasn't it?
Yeah.
So we talked about coming back. We talked about this. We said before, we was like, if we create this 15-minute fair value gap up here,
yeah, right,
and then we talked about creating this 15-minute fair value gap up there. We said if we take this sell side, right, we would want to see the 15-minute give a chance to retrace back up, right? Possibly use this inversion or use that bearish one to go down. We said, cause I was like, if it hit this prior to like if it hit this first before coming back up to it, then we want to see like give the higher time frame an opportunity to retrace, to participate in the bearishness. So when did you flip bullish?
I wasn't bullish only in the sense that I thought we would retrace some, take out the smaller buy model on the 15 before going back to complete anything else. So like I said, I heard everything you said this morning, but I was like, oh no, we'll go hit that again and finish dropping. So
because
I told myself that lie.
When we was looking at this, because this wasn't formed, like this right here wasn't complete yet, and was like if we form this, right, if we form a 15-minute here and we take this out first, then you want to allow for price on the 15-minute time frame to retrace back and, you know what I'm saying, pretty much show you which one it want to use for the bearishness, right? And then you see here once, and you said 21 what was the level you was looking for?
166, but admittedly I am in the old habit of looking too far left on some things.
21 way up here, like all the way up here.
It's 166. You had that original consolidation before we came and took out. It was, you know what? It was part of the move on Friday. We consolidated and then dropped the rest of the way for Friday. So I thought we would retrace to that level before continuing down. But like I said, looking too far left. And again, I know we discussed this morning, and should have just, like I said, once we formed that breakaway gap, I should have just released that. Now, I mean, I didn't get burned or anything. I just said I was surprised it went that low. But that's how my mind was working. That's why I was surprised, because I had
so you look okay. So
you see what I'm saying?
All right. No, but let's say this right here. This is not, and I say no because this is not an original consolidation.
Even though, okay, because it's part of that bigger move of a drop?
Yes. This over here would be your original consolidation there. Like all of this. Okay. Right? All of that like something inside here, that would be like, that can be considered an original consolidation there. Okay. Right? Because, and the reason why I say that is because we've come to, right, an area of completing something, right? We've come here, we're completing something here, right? Even though we didn't take that out, we're coming to relative equal lows, and then we're starting to consolidate. We're engineering liquidity now, right? So we're consolidating here and we're moving. This is just the first distribution right there. You see what I'm saying? Okay. This is a first distribution. That's not an original consolidation right there. Okay. This would be, if anything, this would be your original consolidation, because you've come somewhere, completed something, and started engineering liquidity, right? Inside, and that would be inside, that would start a smaller market maker buy model, possibly, you know what I'm saying, in the future. Like you came down and took out liquidity, or you came down, made relative equal lows, and then started to go back up, right? That right there. But this here, that's just an area of distribution. Okay. All right. That's an area of distribution. And so, yeah. And even still, right? Even if that was an original consolidation, right? Even if this right here was an area of original consolidation right there, right? Yeah. When we zoom out there, right? If that was an area of original consolidation, when we zoom out there, that's not making like we just come here and say we start consolidating here. And when we look at it, let's just get this right here. Let's just come over here, too low. Right, we'll come over here and we'll just highlight this area right here, and we'll stretch this across right there. Right, that right there, in the sense of market maker buy and market maker sell models, right, consolidating right here, that doesn't make sense structure wise to be an area of original consolidation. You see what I'm saying? Like that right there, if anything, right, you would want to look at this entire thing and include that as an area of original consolidation, because when you look at what the market has done, right, like I said, we're coming to an area of pretty much completion. You see what I'm saying? We're coming to a, you're saying we're coming all the way down to an area of completion, right? And this right here is within all of this range right there, right? So you don't want to look inside. You know what I'm saying? You don't want to just come inside here and just try to pick, because we're not pattern traders. You know what I'm saying? Remember, what's the purpose of the market maker models? What's the purpose of the market maker model? That's a question.
The purpose of them?
Yes.
Go up and down? No. I don't know. I guess if I had to take any type of guess, I would say it allows big money to get in at certain things and sell positions at other levels.
Okay. Yeah, that all that's true. But in its simplest form, the purpose of the market maker model is to engineer liquidity, manipulate away from it, and then come back and take that liquidity. That's the purpose of the market maker model, right? So when you're looking at these A's and U's, right? These mountains or tacos or whatever you want to call it, A's, U's. We got a U, right? You got an A, you got a mountain, you got a taco, however you want to look at it. When you're looking at these shapes, you just think, right, in a market maker sell model, right, you let liquidity build, you trade away from it, and then you come back and engage that liquidity that you let build, right? In a market maker buy model, same thing. You let liquidity build. If I can, this 15-minute chart, let's go up to a 60-minute so I can get some more information in there, right? All right, so we come over here, right? We let liquidity build, we manipulate away, then we come back and we engage that liquidity that we let build, right? Because the algorithm, it runs off of liquidity. It needs that liquidity. It uses it as rocket fuel, right? And we can go in and buy and sell as many contracts as we want because we don't have big money, right? But when you're the market, and when the elephant step in the pool, the water gonna move, right? So it's like when you start to move the market, right, you need to have liquidity to be able to get in and out of positions, right? And so if you are here and you want to go up, right, just think about it, right? You're here and you want to go up, right? But the nearest liquidity is there, right? So now, well, and there too, right? So the nearest liquidity, let's get this together, right? So you want to think about it, and we got the market efficiency paradigm, right? So you're here, we're right here, right? The nearest liquidity is there, right? You got a lot of positions to get off, and you want to make this worth your while to make that move to there, right? So what do you do, right? You go into this area of consolidation, allowing liquidity to build up. Why is liquidity building up there? Because people are seeing, right, this area right here, right, this area right there that was resistance there. Now we've come back up to it and hit it and backed off of it, right? So now they're seeing that as strong resistance, a double top, right? So you sit here and you let that liquidity build up. Now you got to pool the liquidity up here, and then you manipulate the market down, right? As the market goes down, right, the further it go down, the more stops get trailed down there, right? Because they see that as strong resistance. Now that you come down to whatever point predetermined by the algorithm, right, then you turn back around and you engage that liquidity that you let build up. And you see we trade all the way up here above that high right there. Remember back when we was talking about this, we was like, we completed this market maker model, and then we was waiting on us to complete that market maker model, and this up here was like the final terminus, right? And then so we completed all these here. Then we said it can possibly come up here, and we can still go down and create relative equal lows and come back, or we can go down and take this out and then come back, right? Because we've already taken all this liquidity. So now where's the most liquidity at? Is it there or is it here? You see what I'm saying?
Those relatively equal lows.
Okay. All of this right here that we're building up, right? We built up all this. We came down, right? And then get on there. All right, we came down, set relative equal lows right there. We came down, set relative equal lows after sweeping this out. Then we let all of this right here build up as we went up here and took out all of this, because at the time when this came down here and set these relative equal lows right there, right, where was the most liquidity? Was it here or was it there? It's up here, right? Because we got all of this trend line liquidity that we're not taking. We just took out all of this and set relative equal lows, right? So we moved back up here to there, right? Set relative equal highs, came down, set relative equal lows, pushed back up, took out those relative equal highs, came back down, took out these relative equal lows, and now we're here where we are at relative equal lows again for the time being. Right? So, like I said, now that we're down here at these relative equal lows, we're down here at a monthly PD array. Now we want to see price engage with sell side, right? Engage with sell side, and then start to go try to make a all-time new high on the higher time frame. Why? Because the monthly time frame is bullish, and since it's bullish, we're at a monthly PD array. Now you want to see the weekly and daily time frame sweep some type of liquidity, right? Because we don't want it coming down here trying to sweep a monthly swing low, right? Because a monthly swing low, that's way too far away. Remember, we spoke about this before during like the weekend chart prep. We was talking about this, right? The monthly swing low is way down here, right? It's way down there. We don't want to see it come all the way down there and sweep that monthly swing low, right? What do we want to see it sweep? Just a prior low, because we said what? That prior low is a swing low. That's a liquidity pool on some level, right? So if we come and take out this prior low right there, we're sweeping out a liquidity pool on a weekly or daily time frame, right? We got a weekly fair value gap down here resting below this prior low right there. Right, so if we got super weak and want to come down to that lower time frame liquidity pool, right? There also, but the reason why we putting the focus on this one here, why? Because that's the one that's inside of our. If you look at the body, right, that's inside of our order block. If you look at the entire order block, it's still inside our order block, right? So if you ignore that huge wick, we're still inside our monthly order block, the order block that we talked about we had traded down to, right? And over here, this month, we respect the order block. And now here we are trading in the first couple of days of May, and we've already retraced all the way back down to it again, right? That it's in a hurry to get back down here. So that's indicative of what you want to see for bullish price action. Why? Because you're rushing to the discount PD arrays, right? And you're looking to see, okay, now that we got to these discount PD arrays, am I getting signatures of getting ready to go back toward the highs, right? That's what you're looking for. Or is it time to, do a much deeper retracement and it fails, right? But until you're proven wrong, you stick with your bias. And for the monthly, again, your monthly sell side is way down here. So that's a really, really long way to go to be proven wrong on the monthly. right? Really long way to go. On the weekly time frame, right? Looking at the weekly time frame, coming down here below this low right here, we're just coming down and sweeping out internal sell side, right? We engaged internal sell side here, right? Last week, rejected back up, closing back in the range, respecting the weekly order block right there, closing inside the weekly propulsion block, closing inside this balanced price range over here, right? Still respecting weekly PD arrays, right? So now we're rushing down towards sell side. We already hit that weekly low, right? Now we got weekly liquidity pool right there. So we hit this weekly low. That's a daily liquidity pool because it's a weekly low, right? So you got a daily liquidity pool, then you got a weekly liquidity pool right there, right? Sweep that and then continue up, right? We sweep this and start getting bullish to support the bullish narrative. Right now, you will want to see this bearish fair value gap become an inversion fair value gap to support getting all-time new highs, right? If you get there and start to pull back some, does that invalidate it? No, it's got a job to do. So it may go there and, you know, get a little bit of a retracement, but eventually you want to see it become an inversion fair value gap on the weekly time frame to continue the bullishness, right? So all in all, you want to not look for patterns everywhere, right? You want to look for the narrative. What's the narrative, right? The higher time frame narrative is this. Do we have a reason to be there? Yes, we got a reason to be there on the monthly, right? The reason to be there on the monthly is the fact that we are trading down to the monthly order block. Monthly order block bullish monthly, right? Trading down to the monthly order block right there. All right, let's clean this chart up a little bit. Oh man, it's 7 o'clock. We've been on here for a whole hour already. All right, so looking at our monthly chart. All right, God dog it. What's that right there? Oh, that was that 4-hour order block that we was looking at earlier. All right, so looking at our monthly chart. Oh my God, it's driving me crazy. What's all these lines? All right. So, God dog it. Jesus Christ. Whew. All right. So now there we got that together. So on the monthly time frame, right? We closed the month here. Right? Closed the month there. So on the monthly time frame, we're bullish. We closed the month there after trading down just before reaching the opening price of the order block, right? Just before reaching the opening price of the order block. All right, so now we retrace back down, right? Fell short of hitting the opening price of the order block, right? Then we closed up here. So now we took out the buy side, then the sell side, and then we said based off taking out the buy side, then the sell side, the three sisters were in a moment of bullish divergence, right? The bullish divergence aligned with the bullish narrative of the higher time frame. We have a bullish order block, right, that we're in striking distance of, resting right at a weekly liquidity pool because it's a monthly prior candle low, right? It's a prior candle low on the monthly, so we know that that's at least a weekly liquidity pool there. Okay, because if you drop one time frame down, it will more than likely be a swing low there, right? If it don't be one time frame down, if you go two time frame down, it should definitely be a swing low there, right? So we're saying at least a weekly liquidity pool right there below that prior month's low. Okay, if you're bullish, you want to see an engage of sell side. It doesn't have to, but you want to anticipate an engagement of sell side, especially if you're having bullish divergence. You want to see some type of sweep of liquidity, right, before proceeding up, right? And then that sweep of liquidity may have happened already, but if it hasn't happened already, you're anticipating some type of sweep of liquidity. So the monthly time frame is bullish. The monthly time frame has a reason to come down there, right? Weekly time frame. The weekly time frame, right? We see the more detail. We have been engineering liquidity here, right? And then when we break out of that area, we engage the sell side, right? We engage the sell side. We're engineering liquidity. We engage the sell side, and then we respect the weekly PD arrays, right? So this is aligning with the bullishness of the monthly time frame, right? We're engineering liquidity, and then we start to engage the sell side, right? And we're respecting we haven't reached the monthly PD array, but we're respecting the weekly discount PD arrays. So now that we engage the sell side and the monthly is bullish, now we're looking for buying opportunities, right? If you're coming into the week looking for buying opportunities, what do you want to see? You want to see an attack on sell side, right? And preferably getting a buying opportunity below that opening price right there, right? If it presents a buying opportunity. If it doesn't present a buying opportunity and it keeps sliding, who cares, right? If you want to flip your narrative to trade down, that's up to you. But if you're looking for a buying opportunity, you want to see some type of engagement of the sell side and preferably get a buying opportunity below that opening price right there. Okay, so the monthly has a reason to come down there. Let's take this candle off for a minute, right? We see that the monthly has a reason to come down there, right? Just because the monthly has a reason to come down there doesn't make us be bearish on the monthly time frame, right? It doesn't make us be overall bearish. Does it give us a desire to see a move on lower prices? Yes, because if you see a move on lower prices, that's giving you a better opportunity to buy. All right, like I say, if you are inexperienced or not comfortable with trading against the grain, right, you just stick with the higher time frame bias and wait on that buying opportunity, right? But if you're comfortable with trading against the grain, you know there's a reason to come here, so you can look for selling opportunities to come down into this higher time frame PD array and maybe into the higher time frame liquidity pools, right? There's a weekly liquidity pool right here. There's a monthly PD array right there. So as we end last week, right? As we end last week, we see that we engineered liquidity, and last week we started to engage the sell side, but we're respecting the discount PD arrays. We're respecting the sell side. I mean, we're respecting the lows. We're respecting the order block. We're respecting the balanced price range, right? Got a balanced price range there. So we're respecting all that stuff, still showing bullish signatures. Now, moving down to the daily, right? We got a reason to come down there on the weekly sell side, right? The weekly sell side is right there just below the monthly order block, right? Since we got the weekly sell side and a weekly fair value gap further away, but it's below the monthly order block, right? We're not trying to force the weekly, but since the monthly has a reason to come down there, right? We're anticipating it coming to that weekly sell side, right? Because you got a monthly order block there in close proximity, so it's possible we can hit it. But since it's a weekly sell side level and a weekly fair value gap, we're not putting a whole lot of emphasis on making it to the fair value gap. We're not putting a whole lot of emphasis on demanding the sell side, right? If it offers it, it offers it because it's below a higher time frame PD array. Well, we want to see it because we want to take liquidity before moving. You see what I'm saying? Take liquidity before moving. But if it don't give it, no harm, no foul. Daily. Remember, monthly has a reason to come down there. Right? Monthly has a reason to come. This is where we closed at. This is where we closed February at, right here. Right? Monthly has a reason to come down here. Right? Weekly has a reason to come down here. Right? We got a weekly. Oh, there we go, right there. Right? We got a weekly. We got a huge weekly order block right here. Right? And then we also got a weekly order block over here in the same spot. This, like, matter of fact, let's highlight the weekly order block and then go back up and look at it on the monthly time frame. Right? So I'm gonna look at the weekly order block here. Right. Bullish order block weekly. Stretch the monthly out a little bit. Bring the weekly over a little bit. All right, now let's go back to a monthly chart and look at that weekly order block. All right. That weekly order block encompasses a little bit more of that monthly order block right there. Matter of fact, the weekly order block is in line with the more beefy candles inside the consolidation area right there. But let's just focus on the last one, right? I ain't picking straws right now because they're all in the same area. But we see that we have that I said weekly, but that's a daily. I'm sorry, I said weekly, but that's a daily what's the name? On the weekly time frame. Right, the weekly time frame, the weekly order block is up here. Right, that's your weekly order block up there. That's just the body of the order block there. That's the entire order block there. Right, that's why I say we respect the order block. We trade it back inside the propulsion block, all of that. Right, but that daily, right, that daily order block right there, right, that right there is inside that monthly, right? It comes all the way down to the weekly fair value gap, right? We also have the weekly sell side liquidity pool resting below there. That's all inside there, but I'm not focusing on the order block for the daily. The only thing I was focusing on the daily was the imbalance, right? Why? Because the imbalance after this low right here was hit, the imbalance was the first PD array that we got to that had not been repriced to, right? I wasn't focusing, and the imbalance was above the monthly order block's body, right? It was inside the monthly order block as a whole, but it was above the monthly order block's body. So we traded there, and we started to retrace back up. right? So now that on the daily time frame, right, we've come down and we've taken out this sell side liquidity here, right? We had not been taking any sell side liquidity all the way up the move, right? We come down, we take out the sell side liquidity, and then we start to move back into the range. Now, at this point here, this is not the time when you say, hey, we're rejecting a low, so I'm looking to go back to the high, right? No, this is a time when you say, okay, I want to go this way, but not just yet. Why is that? Right? Because the higher time frame has a reason to come here. Right? The higher time frame got a reason to come here, and we haven't reached it yet. If we come to the higher time frame and then hit this low and reject it, that's when we will start to look for the high that sent us there, whatever that high may be. If it's here, if it's there, if it's up there, right? But since we haven't come to our higher time frame anticipatory reactionary point, this is not the time to say, hey, we're rejecting a low, let's look to go back up to the high. No, this is the time where you're just looking for a retracement, right, back up. And then what do we look for as far as retracements? The different PD arrays that we watch on that. So now that's your monthly, weekly, and daily time frames, right? All in the same agreement that the monthly has a reason to come down there, right? The daily is in a full-blown sale program right now, right? The daily is in a sale program, right? The weekly is still in a buy program, but it's attacking, right, sell side. It's engaging sell side after this consolidation, right? And so now that we got an understanding of our higher time frames, what to anticipate for the higher time frames, now as we're going into this new month, right, we're coming into this new month here, right, we're going into a new something, right? Whenever we go into a new anything, what do we anticipate? We anticipate some form of manipulation, right? And since we're bullish on the monthly, right, and we're going into a new month, right, we will want to see a rate of sell side, because we would say, okay, that's the manipulation, because we're engaging sell side when we really want to go to the buy side, right? So you would want to see the manipulation. Why do you want to see that? Because you're anticipating bullish prices, so you want to see the attack of opposing liquidity to give you the best opportunity to engage price. All right, so now that we got our one, and then now we're starting our second. Matter of fact, today was the first trading day of the month. I don't know why I thought we had 2 trading days already. Maybe because I traded like Sunday night. So maybe because I traded Sunday night, I was thinking we already had 2 trading days, but we only had 1 trading day. So now we open up the month and we open up the week here, right? We open up the month and we open up the week here, okay? Right there. So let's talk about manipulation, right? If the monthly got a reason to come here, right? What if the monthly has a reason to go down, right, and the monthly is bullish? It has a reason to come down and the monthly is bullish, right? Coming into, right, a new month, right? What would you want? Or coming into a new week, right? What would you want to see, right, out of the very first day? The very first day, as soon as it started off, what would you want to see if if we know, okay, the higher time frame got a reason to come down here. What would you want to see? Oh, it's a whole lot of typing over here. I need to talk faster.
Manipulation up.
Manipulation up. Very good. You want to see manipulation up. And what are some of the tools that we can use I talked about this. When did I talk about this? Might have been on a one-on-one, right? We can look at all these different tools that Michael gives us, right? 200 even, 525, 525. So let's go to 200 evening, 99. What did I say? What was this one here? 05, 25. Who know what I'm marking out here? Who can tell me what I'm marking out over here before I actually annotate it? Who can tell me what I'm marking out over here? Not yet.
Trying to see the quadrant that candle, upper candle wick hit.
But I'm saying, what am I marking out? What is that I'm marking out?
That's where the candle opened, and well, you took the field. Well, never mind. I don't know, man.
Event horizon.
There you go. All right, I sent it, and y'all see over here back there on the 26th, right? I was talking about this with somebody, right? 26 right there, last Wednesday, right? I was talking about the same thing there, right? I was like, this is event horizon, right? And what's coming down. Talk about event horizon, how we came to it and went back up, right? I was like, this is event horizon, right? Explaining what it was and all that right there, right? So when we're looking at this here, we're anticipating, right, price to come down here, right? But we're coming into a new day. We're coming into a new week. We're coming into a new month, right? We're coming into a new something, right? So since we anticipating price to go down, right, we're anticipating some type of manipulation. What do we want to see manipulation to do? We want to see it manipulate into the buy side, right? The prior day's high. When we open up this day, we want to see it do something toward attacking that high, right? And how far up can we go? We got different things that the algorithm has left in place for us to watch. We have event horizon, right? The 50% in between, right? And then I like to watch the quadrants, right? I like to watch the quadrants of the event horizon just like anything else, right? We have a BISI here, right? You got a BISI right there, right? We got a lot of stuff, right? We got this candle here, this candle here that dug the deepest down in this range right there, right? That's the one that came the deepest down here. So we got consequent encroachment of that wick right there, right? Because that's the one that dug the deepest down out of this one and that one there, right? Going up into these premium PD arrays up here, right? So we see we got the fair value gap there, right? That's a little bit, like I say, we want to, as we're going to the left, we want to focus on the ones that we coming to first. So as we're coming to the left here, right, the first thing we get to, what? This SIBI right there. If I said BISI last time, I'm sorry. We got a SIBI right here, right? So if we go past that SIBI, how far can we go, right? Above that SIBI, we have event horizon, right? If we go past event horizon, we got consequent encroachment of that wick, right? Then at the same time, we got consequent encroachment of this wick, right? Just looking at everything we got over there. Then we got you got the quadrants of event horizon, right? And then we got the low of the new week opening gap that's above us, right? So looking at all the stuff that the algorithm presents to us, right? If y'all remember, I said I don't want to mark out this SIBI because we have a new week opening gap right there, and I don't want all of that stuff on there, right? So I think we ran fibs on the SIBI. I can't remember, right? I didn't want all of this stuff on there. We might have just ran one line over there so we'll know the high of it, okay? We got event horizon, right? So when we overshoot the SIBI, where do we go? We went up to event horizon, just above event horizon, and then we dropped it like it was hot and came all the way down to the daily volume imbalance and that monthly bullish PD array, right? Pushing right through this daily fair value gap. Why is that? Because we already repriced it there, right? We came down. Remember, we had offered nothing, right? And then on Friday we came down, repriced it, and closed back above. So when we came down this time, we cut right through it because we already offered the sell side, and we came down to the daily volume imbalance. Because when you go back this way, right, the first imbalance you get to is the volume imbalance. We already repriced that. Right now we got a volume imbalance down there, right? So, and this daily reason for coming down there rests inside this monthly reason for coming down there. So that makes it a higher probability of that we will trade toward that. Why? Because the monthly has a reason to come down there, right? This weekly, like we said, there's no reason for the monthly to come here, so that lowers the probability, doesn't make it impossible, right? It still can go. It's just we don't try to force it because it's below a higher time frame PD array. You let the algorithm show you that it really wants that before trying to trade into it, if you will, right? So when the daily opened up, right, we gapped well above the high, right? So we automatically see manipulation toward the high. Now that we're up there, how far can we go? We got the PD arrays that we're watching because we look like we're above consequent encroachment of the fair value gap already. Reprice the whole thing, go to event horizon, and then come back down and take out the prior month's low and trade down into the monthly order block and trade down into the daily volume imbalance, right? We were let's go down to the 60-minute time frame. All right, so coming into today's price action right here, this is where we opened up. We see here we opened up, that was the high that we formed, that was the low that we formed. We was talking about that was the daily range that we were looking at forming, you know, prior to taking out this liquidity right here. That was our range that we formed. And as we see here, as we engaged the buy side and pushed up, right, we stopped dead at event horizon, right? And then as we went into the 9 o'clock hour, right, we traded up, taking out the buy side above event horizon, then dropped all the way down into the sell side. Now, this morning we were not watching event horizon on our price action. Our price action reading this morning. This morning we solely was basing it off of on the 15-minute time frame that we had engaged with this buy side right here from our overnight dealing range, right? We engaged at this buy side there, and then we swept the liquidity and dropped down, right? Creating an inversion fair value gap of the 1 minute, right? We created an inversion fair value gap of the 1 minute, right? And then we created a bearish 5 minute first presentation. The 1 minute first presentation, I'm sorry, right? So on the 1 minute first presentation, we was basing our bearish narrative based off the fact that we had came up and engaged the buy side, right? We had engaged the buy side. After engaging the buy side, right, we had the break in market structure bearishly, and with that break in market structure right here, coming down, we create an inversion fair value gap of the first presentation on the 1 minute. We created a bearish first presentation on the 5 minute, and so that's when we want to see this 5 minute be used as resistance, right? Based off the fact that we took buy side, created an inversion of the first presentation, then created a bearish first presentation, and when we came up, we did, and we dropped down, taking out that sell side. Once we was heading toward that sell side, we said if we create a 15-minute fair value, the 15-minute SIBI there, right, and then we had this 15-minute inversion fair value gap over here, the green one there, right, wanting to see the 15-minute be allowed to come back up, right, and see if it wants to engage with this, right? But price was done. It was done with all this right here. We cut through, right? And you know, when price cut through, it's showing you that it's a balanced price range. We sliced through this, we traded back up to that range, right, and then dropped again, right, coming back up. We never got back above this balanced price range over here, right? Price never showed a willingness to want to go back above that balanced price range, right? And then when you look at the clues that the algorithm is leaving you, I know it's a lot going on, right? But this 50% right there, that right there is the consequent encroachment of the new day opening gap, right? We closed here. I mean the opening range gap, I'm sorry. We closed here on Friday and we opened up here on today, all right? So that 50% line right here, I'll delete this out of the way, get out of my way, right? That 50% line right there, that's consequent encroachment of this bullish new day, opening range gap, right? That from, and it's being marked out with the field, right? It's being marked out with the field, and we never made it back up. We never made it back up to this 15-minute that we spoke of, so we'll leave it alone. So as we're looking at regular trading hours right now, right? So as price dropped down, right, we went up, we dropped down, traded back up to the low end of the balanced price range we talked about because we cut through it, right? And then price dropped down, engaging the sell side, right? So now here it is, we engage the sell side, then we trade back up to consequent encroachment of the opening range gap, and then we hung out there for a really long time. Right, hung out there for a really long time. And if you see here, we came back up to that consequent encroachment, right, came back down to the low, back to consequent encroachment, back down to the low, back to the lower quarter, back down and swept out sell side, back to consequent encroachment, back down, swept out sell side, back to the lower quarter, back to the low, lower quarter, close to the low, took out buy side at consequent encroachment of the new week opening gap, right? That's the current new week opening gap. So stop there at consequent encroachment of the new week opening gap, taking out the buy side inside of this balanced price range over here, right? So you got a high that's resting inside a imbalance, overlapping imbalances, balanced price range there, trade up into it, and then drop away, right? Taking out the sell side with displacement, trade back up into the fair value gap, the bearish breaker, bearish order block. Then we drop down and we start our march lower, right? Start our march lower, okay? Come down to the 4-hour order block, right? We come down to the 4-hour order block. The 4-hour order block pushes us back up into the range. Let's see how far back up we got, right? So we come here, right? And looking at the 1 minute chart, this is the start and that's the end. We came back up just above, not quite, right there, right? We came back above, just above equilibrium into the sell side imbalance, right? And then we gave up the ghost again, taking out the sell side, trade back up, failed to get to the breakaway gap, gave up the ghost again, came to the low of the order block, down to consequent encroachment of the daily fair value gap, traded back up, failed to get to the 1 minute fair value gap again, then dropped down, taking out the prior month's low, right, traded up once again, right, and then we finally made it down to the monthly order block, the daily volume imbalance, and then started to move back up into the range, closing the day right off of the low, right, closing the day off of the low. So we opened the day over here for, and this is just for the regular trading hours, right? We opened the day here, made a high, dropped back down, consolidated, right, dropped down, traded back up, and closed off the low, right? So we had a power of 3 day as far as the New York session, right? Just looking at the New York session, right? We opened, made a high, right, came down, made a low, and closed off of the low, right? So power of 3 day during the New York session there, right? Then put it on electronic trading hours. If we look at the electronic trading hours, go back to when we opened up here, right? So we opened here, right? So we can't open here, right? Did a whole lot of trading in the range there, went up, made a high, dropped back down, dropped down low, got the eagle on, then closed off the low, right? So we had a power of 3 day also throughout the electronic trading hours too, right? Electronic trading hours too. Electronic trading hours in actuality was, even though it was like a lot of high resistance, it really did give a nice setup for trading based off the power of 3, right? Why do I say that? Because we came here, we traded here, right, and we started to move down, right, and then we got back above the open right there, right? The high of this purple box is the open of the day, right? Yeah, we're gonna put it somewhere, right? The high of the box right there is the open of the day, right?
What's electronic trading hours?
That's all like the futures trading hour from 6 p.m. all the way through to 5 p.m. the next day. And regular trading hours is just the futures trading hours from 9:30 in the morning until like 4:15 in the afternoon.
Yeah, nephew chirping back there.
Yeah, he doing something, looking at something. I think he's looking at a video. All right, and so, right, we get back above the open, right? So we do a whole bunch of stuff. We open up here, do a whole bunch of stuff over here, right? Then we get back above the open, right? Get back above the open there, right? And once we get back above the open, right, we have a nice little Judas swing here. See what I'm saying? Nice little Judas swing right there, right? And then what do we say? You want to wait a minute. Did I delete my? I think I deleted my what's the name? I did delete it. But here it is. Let's put it back. 9:35 candle right there. Let's put it back. I deleted it at some time. Because this is what we spoke about earlier. And this is another thing that wasn't on our radar, but we just pointing this out right now. Right? So like we said, we did all of this and got back above the open. Right? This is the open right here, the high of this purple box right there. Right? And then as we was getting ready to go into the 9 o'clock hour, the 9:30 open, right, we got us a nice Judas swing right here, right? We got us a nice Judas swing going into there, right? So right here on this 9:35 minute candle, right, we took out the buy side, right, and then we came down and took out the sell side, right? They're all in one candle, right? One candle there, yeah. Buy side, sell side, right? Judas swing. Okay, the next candle we dropped down, right, and created the next two candles we created the first presentation on the 5-minute time frame. While we were doing that, creating that first presentation on the 5-minute time frame, remember what we said we did over here, right? We created an inversion fair value gap of the the first presentation on the 1 minute right there. We created an inversion fair value gap there. Then we created the 5-minute, and then looky who stole the cookie, right? Price came back up above what we said this high of this purple box was. The opening price came back above the opening price using that bearish 5-minute fair value gap that we said. Now that we've created this inversion and we're breaking down, we want to see this 5-minute be used as resistance to go down, right? At that time, we were not watching the fact that we were coming. This purple box was there the whole time, but we were not focusing on the fact that we had come just above the high of the new week opening gap, right? And being that that's a bullish new week opening gap, that's the opening price right there at that high. So we came just above that opening price and then dropped it like it's hard. Oh my goodness. This stuff really works. I got a bunch of stuff I need to read, y'all. Some dissertations out here. We've been on here forever too. I'm sorry, y'all. Both NQ and the ES have weekly fair value gap. We talked about the fair value gap, right? So we talked about that. We took care of E-Rock, right? We're saying on the NQ anyway. The ES, I didn't look at the ES, right? Yeah, I didn't think price would go that far into the order block on the ES. Both of y'all talk about the ES. So, all right, so the ES, we got a monthly chart here. Right, so we got a monthly chart here on the ES. Right, so we got the ES. We got the same, we got an order block over there on the ES too. Right, that's the body of the order block there. We got a long wick, so I'm just looking at the body. I want to see the meat and potatoes, right? And then weekly, right? Weekly fair value gap again is down there. So the weekly fair value gap on the ES, right? We got some weekly sell side sitting inside there. We have not taken out the weekly low, right? So you will want to watch this to see if we start to form some type of bullish divergence, right? Because right now the weekly has not taken any sell side yet, right? So we got, this is the sell side. Me personally, I would be watching on the weekly. Why is that? Because it's resting inside a fair value gap, right? It's resting inside. That's the most liquidity there, right? We have some trend line liquidity here, but this is the low that I would be eyeballing. So now the monthly, right? We've traded into the monthly, right? We have a weekly time frame there. On the monthly, right? There's no reason for the monthly to really come down there, right? There's no reason for the monthly to really come down there. So on the monthly time frame, since there's no reason to come down there, on the weekly, right? Not saying that it has to, but that lowers the probability of hitting that weekly fair value gap, because the monthly doesn't have a reason to come down there. It's resting below the monthly. Same thing like it was on the NASDAQ, right? It just lowers the probability of it, right? And now let's do this right here. Let's go over to the YM, put it on the weekly chart, and then look at all three of them real quick. I'm going through all this right here. Is E-Rock still? E-Rock, you still here? I'm going through all this. I don't know if E-Rock still here. E-Rock, you still here? If E-Rock ain't still here, I'm moving on to something else. She said, I'm here. Don't be trying to leave. Don't be trying to get off my question, partner. Okay, so. All right, so put it on the weekly chart. Right. This is the YM. This is the ES. And this is the NQ. We're showing bullish divergence here so far, right? The YM is really far away from this low. The ES is very close to it, and the NQ has taken it, right? So that's the week of the 13th, right? So going back here, that's this low right here, right? So we get in bullish, we're already seeing bullish divergence, right? And we said that this low over here, right, we were saying that it was lower probability for this low and this fair value gap. I'm not saying that it's impossible, but you know what I'm saying, this bullish divergence is lending to maybe not reaching there, right? Lending to maybe not reaching there, right? Because the Dow is showing a lot more strength, trading into its order block and not really showing the willingness to get down to that low. Right? Does it say it can't? No, it don't. But we're just looking at, you know what I'm saying, signatures, watching signatures. Okay. Now, on looking at the daily on the ES, right? Daily on the ES, we came down into that order block. Right, came down into the fair value gap, just like the NQ. The ES and the NQ both came down into fair value gaps, came down into the monthly order block. There's no volume imbalance on the ES, but just like the NQ, we're respecting the fair value gap. Okay, we're respecting the fair value gap. Okay, said something about digging down. Yeah, I didn't think price would go that far into the order block on ES. I thought January low would hold on the ES. Unsure now. So January low. Right. That's the low right there. Right, that's the low right there. It's still, you know what I'm saying, it's still intact. Like we say, we're at the monthly anticipatory reactionary point, right? This right here, this is the time that we're just waiting to see what the market wants to do, right? Thus far, right, at the daily candles, we're not showing any kind of sign of trying to do any displacement, right? We're just running down here doing damage with wicks, right? We wick down here, touch the order block, trade it way back up there, right? Open up, overshot that bearish order block a little bit, traded all the way down to the monthly order block, pushed back up, closed all the way up there at the high of the daily fair value gap. All right, so it's not showing a desire to rush down. Now, it's non-farm payroll week, right? Typically gonna get the cleanest moves Monday, Tuesday, maybe Wednesday, right? Thursday probably gonna be trash. It's the day before non-farm payroll, right? Monday and Tuesday typically be the cleanest days, and then Wednesday, you know, it's 50-50 chance of it being clean or just messy. Michael himself say if he ain't get a trade by Wednesday morning, he ain't trading at all for the week, right? So looking at the intraday times, like on a 60-minute, right? So for a 60-minute on the ES, alright, Sunday at 6 p.m. That's what we started. ES was pretty much like the NQ, pretty much, right? Just looking at how it traded, very similar to the NQ. We opened up, traded up, taking out the buy side, dropped down, right? Pulled back into the range, dropped down, gave up the ghost, and went. So the ES and the NQ, they both were trading very similar, right? They were both trading very similar. Now, if on the ES you was looking for these 60-minute bullish PD rays to lend support and you was caught on the wrong side, then you would have got your feelings hurt. But if you were anticipating price coming down here, I didn't watch the ES, I watched the NQ, and we were anticipating the NQ to come down, right? Didn't really state how far down, but we were anticipating it to come down. Like over here in the morning time, we was anticipating a drop, right? So if you were not anticipating a drop, then you could have got your feelings hurt. But the ES was pretty much just like the NQ. All right. Back testing this markout. Back testing this markout of 50% of the 6:30 a.m. 15-minute candle. If the 6:45 15-minute candle closes below the 6:30 candle, you're bearish. If it closes above, you're bullish. Look for an order block on a smaller time frame. Richard, I'm not sure what strategy that is you're using, but it has nothing to do with like algorithmic signatures for ICT concepts. But hey, if it's working for you, have at it. It's more than one way to skin a cat. But looking at a 6:45 15-minute candle and the way the 6:30 candle closes, that's nothing to do with any ICT concepts. All right. Since the weekly candle closed under the January 6th weekly candle, does that mean we should take out the low of that leg November 4th? The closing of the candle doesn't have anything to do with if we should take the liquidity, right? What has to do with if we should take liquidity is if we're in a buy program or a sell program, right? And we look for signatures to support or invalidate that buy program or sell program, right? So if we look at the you said January 6th week, since price closed below, let me see, it don't matter. I don't care if it closed under a swing low, above a swing low. It like that doesn't mean we're going to do something, right? It's like, is the sell program or buy program intact? That's all it is. Right now, you will hear me say, if we reject the low, it's the algorithm saying I want to go this way, not just yet, right? That's just my internal way of processing what we're doing at that low or that high, right? That's my internal way of saying, okay, this is where we are in the order flow, right? So let me come here. January. Wait a minute. What in the world do we have to do with this January's? Wait a minute. January's, since the weekly candle closed under the January 6th. Oh, on NQ. On NQ. All right. I'm like, what in the world? All right. So get all this junk out of here. All right, so January 6th. January 6th. Again, what does it have to, what is the significance of that January? Talk to me, Rock. What's the significance of that January 6th low? Since the weekly candle closed under the January 6th weekly candle, does that mean we should take out the price leg November 4th weekly low? Okay. Is the 1/6 and 1/3? Is the 1/6 and 1? not a swing low. 1.6, 113. The swing low is here on the 113. This is where the swing low is right here. So the 113 is the swing low, right? 1.6. This is the low with a higher low on the left and the right, right? So this is your swing low right there. That's what I'm like, what's significant about that? But the 113, right, that's your swing low right there. But this candle here closing below that doesn't say we should take that out, right? What it's saying, what would be saying we should take that out? Let's just say we don't take this for like the rest of the week, right? Let's say the rest of the week we don't take that out, right? Then, right, we would have a fair value gap here, right? And if you was bearish, right, if the higher time frame was bearish and we didn't take that out right here, then you would want to see price use it as resistance to come take it out, right? But since we're consolidating here and the higher time frame is bullish, right, when we start to trade outside of this consolidation, then you want to see us, right, because this weekly candle ain't even closed yet. So I don't know why I'm looking at the weekly. All right, we haven't even closed yet on the weekly, right? So on the weekly time frame right now, we haven't even closed yet. So we're still in the phase of, okay, I want to take this out to sweep liquidity to go back up and create an inversion fair value gap to make all-time new highs, because the monthly time frame is bullish, because we're trading at a monthly PD rate. So sweep some weekly liquidity and then take it up, even though we already swept weekly liquidity here. So this weekly low again is below, right, the monthly PD array. But since it's like right connected to it, right, since it's connected to it, that's why kind of leaning on, okay, let's go ahead and sweep it, because we're connected to it. Whereas the weekly fair value gap, not really looking for it to get there. It can, but not really looking for it because it's so far away from the monthly, right? So the daily closure below this right here, who cares? Don't get caught up in, I hear people all the time saying, oh, we got a closure below, that's this right here, we got a closure below. No, right? No, that's not what it is, right? Right, that's not what we got a closure below. That means that closure below is just confirming something else. It's confirming, yes, we're still in a sale program. It's confirming, you know what I'm saying, yes, price is bearish. It's not confirming we should attack that, right? Because we closed below that low. Right? Just like when we, creating PD arrays, if it offers that price, the price is already offered. Right? You want to see us shoot up? Okay. It closed on this. Okay. What about on the daily? Since Friday's candle closed below the 13 daily. Same thing. It's same thing. All right, same thing. It don't matter, because look here, right? See right here, this daily candle closed below that. The next day, what did we do? We took out that and then we closed right back above it again. Right? Closed right back above it again. All right? But the order flow is bearish. So just like, remember what I said about on the weekly, right? If we create that fair value gap and we don't take out the sell side, you want to see price trade back up to it and use it, right? What do we do here? We close below there, right? We came back up here. We created a SIBI right there, right? So what do? Right? We use the SIBI to push down lower. You see what I'm saying? It's like the order flow that's telling you we should take that out. It ain't, oh, we closed there, so we no. The order flow. Focus on the order flow. Don't shift your focus to stuff that really is not telling you anything. It's just, this is telling you something, but it's telling you something else. It's telling you, oh, this sell program is still intact, right? It's not telling you, oh, we should attack this, right? This sell program is still intact. Since the sell program is still intact, where's the most liquidity? Right there. Because the sell program is intact, I'm anticipating attacking this liquidity because that's where the most liquidity is, right? Oh no, we rejected off the low. It don't matter. We got a bearish fair value gap now. Because the sell program is intact, I want to see this act as resistance because the liquidity pool is down here that I anticipate us engaging. Right. Y'all follow what I'm saying?
So is that an example of we took that, even though it's internal, is that an example of taking external liquidity with that swing low and then going back into the CIBI for internal liquidity, using that to push further down?
You talk about this, taking out this?
Was that like the external liquidity and then we formed the CIBI and returned to the internal?
Yes, we took the external liquidity right there, right? Okay. And then we traded back in here. And I'm glad you said that. I'm so glad you said that, right? Because remember when we like if we go right here, we went to external here, then we came down to external there, right? And then we start pushing back up that strong like that. Then somebody may see this as a rejection of the low and say, okay, we're going back to the high that sent us there because we rejected this external liquidity, right? Oh, the buy program is getting ready to start off. The sell program is getting weak. We got a strong rejection. We rejected the low. So now we're going back to the high right there. Right? Look how we cut through this like butter. So now we're looking at this right here as a balanced price range, right? And we formed a bearish fair value gap after that balanced price range, right? So now, since we haven't reached the largest amount of liquidity, right, we're still looking for the sell program to be intact. Why? Because it is, right? We came down and we pushed through that sell side, right? We traded back up. We didn't make it to this bearish fair value. This bearish order block. We didn't make it there, right? All we did was trade back up into the range. Now we have a bearish fair value gap there. The sell program is still intact. We got to give this an opportunity to do its job, right? We go up and we drop down. We still haven't made it to the the biggest liquidity pool yet. So now you're watching. You want us to not take out this up close candle. You want to see this up close candle act as resistance, right? Once we get to the biggest liquidity pool, then we can start looking for a reason that we reject this and look for the high that sent us there, right? But until we hit that biggest liquidity pool, we're not looking for a reversal, right? The the sell program is still intact, right? Sell program is still intact. I thought the closure were important for anticipation, continuation, rejection. The closures are important for continuation, rejection, whatever, right? But the closures don't make the closures mean something that it don't. You see what I'm saying? Don't make the closures mean something that it don't. Don't say, oh, we closed there, we gotta do this. Oh, since we didn't close below this low, we going back up. Since we closed below this low, we going down. Don't make the closures mean something that it don't mean, right? Because see here, we closed below this right here, but we still retraced before coming down, right? Right? We still retrace before coming down. So it's like the open high low close is very important, but don't make it mean something that it don't. And that's where a lot of people make their mistakes. That's where I made the mistakes, because I was listening to a bunch of furus saying stuff, and it's like they just are getting lucky, or they're going through cherry picking. See how it did it right here, and they'd be like, well, why it didn't work there? Oh, nothing ain't 100%. No, you're just going through cherry picking stuff where it makes sense with what you're saying, and then when you say, well, why it didn't work over here? Oh, ain't nothing 100%. You see what I'm saying? They wrap it up in that little nice packaging and hand it to you with a bow on it for $5,000. Right? Wouldn't this be like a manipulation after engineering liquidity? Wouldn't what be like? You got to help me out, Empire Trades. You can't just say wouldn't this be like. I can't see what you pointing at on your screen. Do y'all for real now? Seriously, do y'all understand what I'm saying when I say don't treat the instructions for the ICT concepts like the gospel? You know what I'm saying? You know how the Bible say that don't add to or take away? You know what I'm saying? Don't add to it or take away. Don't add to it or take away. Everything is written out exactly how you need it to succeed. Right? Michael has written everything out exactly the way you need it to succeed. Right? Just like the Holy Spirit inspired these men to speak and write exactly what you need to succeed. Don't add to it and don't take away. Right? That's why I say don't go in and try to change the way you look for a breaker. Don't go in and try to change the way you look for a fair value gap. Don't go in and try to change the way you look for an order block. Don't go in and try to change what this closure means. Right? Don't add to it and don't take away. Right? I know you ain't say since December. I know you ain't said that. I know you ain't said since this is December right here. That's the start of December. All we did was consolidate right there. Right? All we did was consolidate since December. Now, what we did say is while we were consolidating, we were engineering liquidity, and because the market is bearish, we're coming into a new month. We want to see an attack on sell side, and then a bullish signature of wanting to go back up and make all-time new highs, because the higher time frame is bullish. Right? Because the monthly time frame is bullish. Now, and since we're talking about a monthly time frame, right, this could take a month or two to play out. Right? Remember what we said, the invalidation point on the monthly was like way down here somewhere. It was like super low. It was like way down there. The invalidation, like the swing low. Yeah, the swing low on the monthly time frame is all the way down here. Right? That's where the swing low on the monthly time frame is. Right? All the way down there. So that's the liquidity pool on the monthly time frame. Right? And if we look at the lowest low on the monthly up to the all-time high, right there, right? If we swept that low, that'll bring us back down right around equilibrium. Taking out that low would take us to equilibrium. Taking out this low right here would take us into a discount, and also taking us to a discount would be hitting that weekly fair value gap that we was talking about right there. Right? And that'll take us back down into a discount by taking out that low right there. All right? And we traded up into there, push down, right? And that's still showing the order flow is bearish. So we want to see that order block, stop price, and engage the sell side. Once we engage the sell side, now boom, we've engaged the sell side. We're in a discount, right? We're at this monthly anticipatory reactionary point. So we want to see this monthly candle respect this monthly God dog it. All right, y'all. The feds say we've been on here too long. It's been 2 hours. I appreciate y'all for hanging out with me, man. Hey, that's it. That's it. That's it, man. Hey, I'll tomorrow is Tuesday. All right, no tape reading tomorrow. Wednesday is tape reading, and Wednesday night is our first monthly lecture with the Diamond Group in the Discord. Our first monthly lecture with the Diamond Group in the Discord is being brought to you by, I think Jada requested it. I think it was Jada. We're talking about trading breakers with fair value gaps. So we're going to be talking about breakers, fair value gaps, and a model that Michael created called the unicorn model. We're going to be talking about trading breakers with fair value gaps. Now, if y'all think y'all going to sit up here and constantly giving me a whole bunch of stuff to try to get me to give you models to trade, you're sadly mistaken. Okay, I'll talk to y'all tomorrow at 6 for the price section recap. I enjoyed tonight. Y'all enjoy the rest of y'all night, and I'll see y'all tomorrow at 6. Again, if this was your first time tuning in to Tim's Tidbits, I hope you learned something. I hope you enjoyed yourself. If it wasn't your first time tuning in to Tim's Tidbits, thank you for coming back and seeing your boy. It's your boy, Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's just Big Spot if you don't hablo español. Y'all be safe out in these trading streets, man. I'm gone.